Although Meta Platforms stock is expensive, a long-term buyer will be happy with the outcome. Meta Platforms stock has outperformed every other Magnificent Seven stock in 2024. Its free cash flow easily pays for its new quarterly dividend. The only question mark is whether the company can maintain tight control of expenses. Let's dive in. Should you jump on the Meta Platforms stock bandwagon? Here's what to consider now. Welcome to Timely Investment Research. Year to date, Meta Platforms stock continues to outperform the rest of the Magnificent Seven, up 7.72%, 144 basis points clear of NVIDIA. If it were all about wealth, NVIDIA's CEO and co-founder would be the winner. His wealth increased by $63.4 billion in 2024, giving him the most significant move year to date on the Bloomberg Billionaires Index. He is ahead of Meta CEO and co-founder Mark Zuckerberg, whose wealth has risen by $47.8 billion in 2024, making him the second biggest mover of the year. Meta stock gained in Thursday trading because Raymond James analyst Josh Beck, who has a strong buy rating, raised his target price by $25 to $550, 10% higher than where it's currently trading. There is no question that Meta Platforms stock is on a roll. The question investors have is whether it can stay that way. I'll address the pros and cons of Meta stock and decide whether to buy or sell it. Meta Platforms remains attractive. Two things are driving Meta Platforms higher. Its digital advertising business, AI, and large language models generate significant revenue for the company today, and the latter should generate significant revenue tomorrow. The company reported its first quarter 2024 results at the end of April. Revenues were nearly $37 billion, 27% higher than a year ago. CNBC noted it was the company's biggest quarterly growth since 2021. I most recently discussed Meta Platforms at the end of March. It was one of 3 communication services stocks I recommended. I felt that the cost cuts it made last year, combined with a focus on the core business and putting the metaverse on the back burner, were wise. Now, shareholders are reaping the benefits. As of March 31, Meta's free cash flow was $12.53 billion, almost double the $6.91 billion in first quarter 2023. That free cash flow growth made it easy for Meta to introduce a 50-cent quarterly dividend with the March payment. In 2024, based on 2.63 billion in shares outstanding, it will pay out $5.26 billion in dividends. In the first quarter, it generated more than half that in free cash flow. Meta's awash in cash. Meta Platforms stock has come too far, too fast. From its November 2022 lows around $90, Meta Platforms stock is up 447% through June 6. That's some move over the past 20 months. Over the same period, Microsoft, the largest of the Mag 7 by market capitalization, has seen its shares double. At the end of 2022, Meta had a price-to-sales ratio of 2.79x today. It's more than 3x that multiple with a price-to-sales ratio of 9.15x. Microsoft's price-to-sales ratio at the end of 2022 was 8.88x today. It's 13.38x, 1.5x higher. Given the growth of its stock over the past 20 months, it makes sense that they're both higher. However, the renewed commitment to invest big dollars, specifically in AI, has spooked investors. The concern is that the commitment to cost containment has only lasted a year. If it goes back to its big spending ways, that will put a big dent in its free cash flow, which it uses to pay the new dividend. Analysts don't seem too concerned about Zuckerberg's comments about spending. The advertising revenue growth trajectory is as expected, and top end of the second quarter guidance range point to 22% year-over-year growth against tougher compares. Who would have thought that was possible a year ago? Investors Business Daily reported Bernstein analyst Mark Shmulek's comments about first quarter 2024. The company continues to seek additional revenue streams beyond its core ad business. Ads account for 98% of its revenue, so it needs to diversify. The bottom line on Meta Platforms. While Meta's valuation is high, its ability to generate massive amounts of free cash flow makes it an attractive bet to overcome its lack of diversification. AI could be the success for the company that the metaverse wasn't. Meta Platforms stock is a long-term buy. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.